Right. I want you to notice something, guys. When we are trading, right, let's really keep this in mind. We want to go back a little to some of the stages that we've been into, but we want to really strike this up this time. We said we have something that we call market structure. Right. Basically, market structure is how our charts are bound to move, how our market is going to move, what we expect it to move like, and the moves that it gives us that we are going to take note of. Okay, so we have what we call market structure, right? In this section of market structure, we have to know that higher time frame will determine what? Will determine what we call overall direction. Right. This is point number one. And point number two, what we have to know is our H4 and any other time frame below H4 is going to determine momentum and what we call intraday trading. Right. What we also have to know is point number three is every time frame has its own market structure. Right. So we have to keep this in mind. Right. Let me do this. Remember what we said last time, that when we are analyzing charts, we want to start from a bigger time frame, moving on to a smaller time frame. Right. So in this case, let's say our daily chart is going to be represented by a straight line. And our H4 chart is going to be represented by a zigzag line. Sorry, a zigzag. Right. What does this mean? This means you can open your charts and you see your daily chart moving like this. Right. Basically, what is happening here is our overall direction of our daily time frame is a sell. Why? Because we have lower highs here, creating lower lows and lower highs, breaking previous lower lows to create new lower lows and lower highs again that break previous lower lows to make new lower lows. So this is going to determine our market direction. Okay, so basically by us knowing or noticing this, then we are now able to say we have known or we have discovered our market direction. Break of this point here means we have to come and create a new lower low, right? And if we do this, break of this previous lower low point again means that we have to fall down again and create a new lower low. This is what validates an uptrend, a downtrend, I mean. And the opposite is true for the uptrend. Okay. So we said a straight line is going to represent our daily movement. And when you move on to a smaller time frame, you might find that, please note this, your H4 won't be moving as smooth or as much concentrated as we are on day one, right? But your H4 will be moving like this. So at some point, your H4 is in a downtrend. And at some point, just because we've created a lower low in a smaller time frame, we have to do what we call break of structure here. Here, somewhere around this point. Now, before I go any further, break of structure is when we notice that we have lower lows. Let me draw it precisely. We have lower lows, lower highs, lower lows, lower highs, lower lows. Remember, we said, sorry. Let me do it this way. Lower lows, lower high, lower low, lower high, lower low. And we said as long as these points are being broken, we continue going in a downtrend. But now, when a lower high gets broken like this, that means we have changed direction and we are now coming from a downtrend and we are now going to an uptrend. The break of this previous lower high is what we call break of structure. Okay. And break of structural points means we've changed direction, and this has to happen in smaller time frames. Now in H4 now starts giving us higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, until we do again what we call break of structure. We now change direction and we are now moving like this. So now this is an impulse, right? And the correction to that impulse is here. So basically, let me type like this. So basically, the correction of this impulse doesn't mean we are now changing over our direction. This is just a correction on a daily time frame, and on a smaller time frame is going to appear as if we are now in an uptrend. But just because we've discovered our major move, we know that break of these structural points are what we are working with. And to know that we have finished this correction, we have to break structure and give out another impulse. This is also another impulse that we see here. This is a correction. This is also another impulse that we see here. Okay. So you can note this down. After creating a new lower low on a higher time frame, we wait for a lower time frame, that is H1 or H4, to break structure, and then it corrects or it gives us another impulse. And then you might want
sorry, please repeat that statement.
You might, okay. After creating a new lower low on a higher time frame, as you can see here, we have created a lower low on a higher time frame. We wait for lower time frame, that is H1, H4, M15, M30, M5, to break structure, and we change direction as correction moves or as impulse moves. Okay, and we might also want to write this down. I'm going to say it now. To validate a lower high, we must have a lower low confirmed. So basically what we mean is this. We said this is a lower high, this is a lower low, this is a lower high, this is a lower low, this is a lower high here, right? So as long as we don't break the previous lower low here, let me type this lower. This one might confuse some people, I know, if I don't type. As long as we don't break this lower low from this lower high point here, then that means whatever is going to come is not a new lower low. What do I mean by that? You might find that I have a lower high here, and I have a lower low here. Now, we said this is my impulse and this is my correction, right? And as this is my correction, I must come and break this area, because this will be an impulse move. This is my new lower high, right? So I must come and break this previous lower low in order for me to say what's going to come after this is another new lower low. But now, if you see my trade acting like this, not coming to break this previous lower low, and now doing this, then that means this is not a new lower low. And this is not a new lower high. Why? Because I haven't broken the previous lower low. Now, when this scenario happens, we say we haven't validated a new lower low. this might mean we might change direction or anything like that. But now you have to know that we have things, or we have this term that we use here. Sorry. We have, oh, sorry, come on. We have what we call a complex pullback. Right. What is a complex pullback? A complex pullback is the one that gives us a lower high. Let's do it like this. It's the one that gives us a lower high, right? It gives us a lower low, right? And it gives us this correction. It comes back, it doesn't break this previous lower low point here. It doesn't break it. Let me do it precisely. Okay. It doesn't break it. Rather, it stays above, right? And what does it do? It comes in, it fails to break this previous lower high, because when it breaks this previous lower high, that's when we can say now we have break of structure, right? And what does it do? It comes later on and break this lower low. So a complex pullback is the one that looks like it has a lower high and a higher high. But these ones are invalid. Why? Because they haven't broken this lower high and they haven't broken this lower low. Rather, we are just ranging in the area of the lower high and the lower low, and anything that happens in between this remains inside. We can't say structure has been broken, right? Now we can only say structure has been broken when it breaks this previous lower low or this previous lower high. But we don't count in terms of a downtrend. We don't say this is break of structure. We will only say this is break of structure when it breaks a lower high. Why? Because we are coming from an uptrend we are coming in a downtrend, and when we switch to an uptrend, that's when we can say these points are what we call break of structural points, and we are now changing and going up. So break of structural candles is determined by break of bodies, not wicks. So when we say a candle has been broken, we are saying the body has come and closed above like this, right? We're saying the candle is come and closed above. But when a candle fails to come and close above like this, sorry, let me do this. When it fails to come and close above like this, then we can say that this candle has been broken. Why? Because this body still remains below. So when we talk about break of structure, generally maybe we are seeing a trade that is going like this. Let's say we are coming in a downtrend. We leave a lower high here, and we have candles that are going to look like this here. Sorry, we have candles that are going to look like this, right? We have candles that are going to look like this, right? And then this is our lower low, and then our trade continues. If I draw more candles, it will take time. So what we are calling now break of structure is when we have a lower high and we want to see a candle coming to break or close above this candle like this, right? This is now what we call breakout structure, and we are now expecting our trade to move like what? To move like this, and then it continues in the uptrend, right? So when your trade doesn't close above and you see it acting like this, you see a wick like this, this is not breakout structure, right? That is not a break off structure, guys. It's not a break off structure. So please note that statement very carefully. Okay. Now, so we have what we call time frame alignment, whereby your daily chart, you can see it what? You can see it selling. Your weekly chart also, you can see it selling. Right? But then you can see your H4. You can see it buying. And maybe you can see your H1 selling. Right? Generally, a scenario that we are looking forward to achieve is for at least maybe weekly, daily to sell, and H4 and H1 to buy. Why are we looking forward to see this? Sorry, oh, come on. Oh, okay. Okay. Right. I think I managed to remove it. So this is what we want to do. So this is what we want to achieve, guys. We want to see our, as I said before, say this is our weekly and our daily chart selling, right? The reason why we might see H4 and H1 buying is because we want to have a correction before we continue with the downside. These areas are where we are going to see our H4 and most probably H1 buying before continuing down, before giving impulses, Okay. And when we reach these areas of breakout structure, we expect H1 to structure first, followed by H4, and then now all our time frames will be aligned. Week 1 selling, G1 selling, H4 selling, H1 selling. So in this case, we can have larger time frames being bearish, right? Is the overall downtrend, but smaller time frames are going to be just bullish so as to trade corrections. Okay. Is there anyone who's not understanding currently what we're saying, eh? Okay. So it's always good to see your trades from a bigger time frame, and then you break them down to smaller time frames. For example, here, let's say we can have a weekly, right? And your weekly will be looking like this. Right? So basically what we're having here is a lower high. We have a lower low. Sorry. We have a lower low. We have another lower high here. We have another lower low. We have, let's create a scenario whereby we break this area. Who knows what this becomes when we break a previous low high? What does it become? This becomes your higher low, and now this becomes your higher high. And this also now becomes your what? Your higher low, coming from the fact that we've broken the previous higher high point, and this now becomes your new higher high. And recording this session, you can access it in our group in case you are missing some things here. So don't worry, I'm going to be posting this. Right. So there are certain questions that you just have to ask yourselves. Why did price fail to break this previous lower low? Maybe it wants to push up and break this previous lower high. Okay, it has broken this previous lower high. Why? Why is it broken this previous lower high? Because maybe on a larger time frame, we are now changing direction, or we are now trading in correction move, or we are now switching on to an impulse move. So always ask yourself, why? Right. So this move that here that you can see on the weekly chart, on the H4, it can be looking like this. Right? This will be my last chart for the day that I'm going to draw here. If I feed you too much information, and some of you will trip. So what I would actually want you to do is, I would actually want you to go and read on what we've just done now. So your H4 chart might be looking like this, right? Right? And this area, this lower high, is this area here, right? And this lower low is this area here. We have breakout structure in M4, right? But we failed to break the previous lower high, so we leave a new lower high. We have breakout structure again here, right? Price is now distributing here. So with this structure, we start falling, right? Now the lower low is this area here, right? We break structure again, right? Then what do? We rise up, we break this weekly lower high here, right? We've now broken this larger move into a smaller move. So ask yourself, always ask yourself why. Here there is price distribution. Why is there price distribution? Here there is accumulation. Why is there accumulation? Accumulation means you're not going up, right? Distribution means falling. Price is broken structure here. Why is it broken structure here? Because on a weekly chart, we have an impulse. So price is broken structure so that we can correct this move before we move down. So these are the type of questions you always need to ask yourself as a trader. And these are the things that you really need to look at first in the market. Okay. So for now, I want us to go and digest these things that I've just shown you. I'm going to post charts in the group so that I will be showing you the lower lows, lower highs, breakout structure. And I also want you to do the same. I'm going to give you a homework in PDF format. So thank you very much for attending this Zoom session tonight. Go and grasp the concept that I've just taught you. I'm going to be posting this video in our Zoom, in our Telegram group. So thank you very much for attending. If you have any questions, please ask them on our channel and then I'll gladly answer them. Thank you very much, guys. Have a good night.